Welcome to a Wiser Retirement Podcast. We put together a guide with some recommendations to help you focus on being financially fit at different milestones in your life. Some of you may be ahead of schedule, while others may have to play catch up. You can download this guide for free on our website. The link to download Your Path to a Lifetime of Financial Success is listed in the episode description. Or you can go to wiserinvestor.com, scroll to the bottom, and find it there. Now on to today's episode.
Welcome to a Wiser Retirement Podcast, where we believe the best financial advice should always be conflict-free. I'm your host, Casey Smith. Guiding you to financial freedom today are my co-hosts, Brad Lyons and Missie Beach.
Hi, Casey.
Hey, good morning.
Welcome back, Missy.
Thank you.
You're not nervous, are you? You just found out this is recorded live on our YouTube channel, which is called A Wiser Retirement.
News to me.
That's all right. Brad's the only one who gets dressed up for it.
Someone's got to look good.
I got to look the part at least.
Yeah. Thank you for bringing us up a notch, Brad.
So I ran across this quote from Lily Tomlin, which I have no idea who she is. Evidently she's
Comedian.
Comedian.
That's right. I only read business books. So anyway, I saw this, and she was quoted as saying, "When I was growing up, I always wanted to be someone. Now I realize I should have been more specific." You know, I think that's so true to like even financial planning, right? It's like we all want to retire, but you think about the conditions of which so many different people retire in. We probably should have been more specific.
Right.
What quality of life do I want to retire into? And there's so many things that you can do to change that trajectory now versus when you're 59 or 69 and a half, right? Being forced to work till 70, have to work on Social Security. It's a real thing. I mean, I think it's, there's so many wealth management firms that are out there and that only work with people with $10 million or more in assets under management. Well, we do that. We do that well. But we also work with just people, right? People who find us, who need help. We're going to help them. Missy, you and your team are really good at that. And so we have to recognize that financial planning is not just data in, data out. There's a lot of, our industry tried this thing for a while called life coaching. You could get like a life coaching certificate. I don't know. I thought it was like the feel good mushy stuff. And I'm like, oh, that's stupid. Who wants to have a life coach degree?
You don't need a certificate for that. I mean,
to me, it just should be part of the process, but somebody's trying to make some money and say, I'm a certified life coach. And I think the people that probably seek that out are probably not the people that we're necessarily looking for. We're looking for people that are intentionally trying to set goals and achieve those goals.
exactly.
Right?
I mean, there's some numerical facts behind a path to retirement, and I think it's our job to couple those with the esoterical, like the fun stuff and the goals that aren't really tangible, but they're out there. And I think that's what a conversation is used for. It's something that you're not necessarily going to get out of an online calculator that you find on the internet.
Well, yeah, that's the internet calculator is a whole different issue. But I don't know. I kind of cringe at the word retirement. Mm-hmm. Like people say retirement planner, or let's focus on retirement planning. And I know that we use that word like Kleenex. There's different brands. Mm-hmm. There's different ways of doing things, but it's kind of like rich. Like when kids say so-and-so's rich. Oh God, that's a horrible word. That's a horrible word. And I like financial success, or financial freedom.
Financial freedom is good. Yeah. And, I've found in recent years, more and more clients really cringe at the word retirement, just like you do, because they kind of think of it as like the end of the line and like, oh, am I getting old if I say I'm retired? Because they don't want to see it as the end of something and they're just checking out. They want to see it as just that, financial freedom, where they no longer are forced to work for that paycheck in order to live their daily lives. They either want to have the option to continue to work because they just love their job, or they want to have the opportunity to find perhaps another job that just fulfills a passion that they have. So it's not really retiring. It's kind of like, a different phase of life. So financial freedom is really a good way to put it.
Yeah. You do the job, but you don't have to do the job.
Mm-hmm.
Sometimes that makes the job a lot more fun.
Oh, yeah. Just knowing you could
Depending on what
walk
you're doing.
away. Mm-hmm.
Yeah. Right. I mean, I always go back to aviation because we have so many clients here that are in aviation, but I go back to, there's one thing to fly your schedule. Maybe you drop a trip or two to be there for family. It's another thing that you to fly your schedule, and then you have to pick up extra trips to get extra money in order to achieve your goals. That's a job. That's no longer there's a love for flying. That's just a job at that point.
Right.
And you could translate that into any career, really. You're a cog in the wheel, and maybe you find fulfillment in being that cog in the wheel.
Mm-hmm.
But it's another thing to go, dang it, I have to do this. And then when your boss gets cranky, then you're like, I'm no longer enjoying this.
Yes.
So,
But that transition, even that takes planning and forethought, doesn't it?
It does.
Perhaps even more.
Yeah.
Quite frankly. So I like the word you used earlier, and that was intentional. For clients who are intentional about that next transition, that next phase in life, seeking out a financial planner such as our firm that is really a holistic financial planning firm, it's a great place to get that advice and consultation. And like I said, it's not just numbers. I mean, when I talk to clients and prospects that are inquiring about our services, one of the things I say is, yes, we have the competence to do this, but also we've been doing this for over 20 years. We see the people in different phases of their life and the transitions that they've made. So we see people that are early on. We see people that have gone through transitions. We see people that are in that other phase, and we know what works. And we know where all the pitfalls are as those transitions are being made for our clients. And it gives us the opportunity to share that with somebody who's coming in and inquiring about our services. So yeah, the numbers are important. The numbers work, okay? But it's that extra, that advice and consultation that a holistic firm can provide. And is really just as important because it helps to make those decisions that then the numbers follow sometimes, or even offer and provide. Yeah. You're
right. And another thing that makes me think of as the clients transition and, so many say, oh, I want to retire early. And so we might have planned for an age 62 or whatever the number might be. And then they come in that year and we're thinking, hey, this is the year. Are you going to, put in your notice, and do we need to start planning some retirement income? And they'll just come in and say, nope, not ready to pull the trigger yet. And they're like, but it feels so good to know I could if I really wanted to. And then even 2-3 years down the road, you might ask them like, okay, is this the year? Is this the year? And they'll say, nope, just push it out. I'm still happy. And so there again, like they're the ones controlling their own destiny, but we've already put the plan in place where they have that financial freedom to make that decision for them. So it's just really a good spot to be in because like Brad said, we've looked at everything in their financial picture that allows them to do that. All their ducks are in a row.
And to that point, look at this year. I mean, if all planning was done solely on numbers, which is generally financially oriented, this year, 2022, with the market performance that we've experienced, would have theoretically, delayed people's retirements. Okay, but it's the other aspects that we bring to the table, okay, that play a role in somebody's planning. That I don't know that we've had to tell anybody this year that I'm sorry, even though we plan for you to retire this year or early next year, that it's not going to happen. We haven't had to do that yet.
No, it's funny how that data works. You know, what happens is they were on track prior to this year, and then the probability of success has dropped. You can't have a 20% drop in the markets and not have any change in the plan. So now the probability of success is kind of out of our normal range and has come down maybe 3 or 4%. So if you renormalize it and say, okay, I want to be able to take on another financial crisis in addition to whatever this is we're going through, then the income has dropped a little bit, but nothing is significant enough that would cause someone not to retire.
Right.
And that's partially because our planning process is so conservative, because it's built on planning, not built on asset management goals, which I'll go back to. You know, the title of our podcast is Holistic Approach to Financial Planning. You know, and that's part kind of goes into our theme that I want to do for next quarter, which is really focusing on the aspects of planning. What is planning? Bringing in some outside people to do the podcast with us, because you can have two different advisors do a financial plan, and you get two different results.
Yes.
And so you have to understand when you're getting real planning and when you're not getting real planning. And if your financial planning is done in 20 minutes, that's not financial planning. That is a time value of money calculation, right? That's done with a calculator that looks like financial planning. Maybe they asked you some questions, they put it all in. They're just trying to sell you more product is what they're trying to do. And even people that use our software out there have plans that net out something totally different. This is not accounting. Accounting is square peg, square hole. And if you get it wrong, the system breaks. In financial planning, personal finance is very much an art form. Not art as in creative as in like, creative math or creative spelling or whatever that was many years ago that failed. But it certainly understanding how to use the tool. So the tool is the planning software. So you have to be able to use your planning software like you would use a shovel, right? So the shovel's not going to work without the person digging, but it takes the mind of the person digging to dig with the right technique to get the most dirt and work most efficiently, right?
Right.
And it's the same way with financial planning software. You can't put the software is not going to do anything by itself. It'll do calculations for you. It'll help you dig or do the plan more efficiently. It could take into account more variables than using an Excel spreadsheet, which we get clients all the time that come from large firms in the metro Atlanta area that still use Excel spreadsheets or some form of it for their financial planning, which is so antiquated. I'm like, the world doesn't operate that way. It's crazy. But ultimately, we had a case where an engineer came in and he basically said, I've already done the plan. I found out you guys use Money Guide Pro. And I did this plan myself and here's the answers. And I am so glad I met him after being in this industry for 23 years, because if I met him in my first 5 years, it'd been a very different conversation. But now with our wisdom, we all have it here in this room. It comes with time. I was very quickly able to say, that's great. And like, it's not that I didn't care. I did save it. And then at the end of the planning process, I said, it wasn't I want to prove you wrong. I was just trying to show him, this is the value of a financial advisor that's looking across all areas of your financial health, not just your investment portfolio, because my outcome was about $100,000 more a year in income than your outcome. And your outcome was just data in, data out, right? You didn't think about the process and how things work together in your business, right?
Exactly. Well, and another thought about data in, data out, even though we have software that we use, two comments, no two client plans are ever the same. And it's just the way life is, because no two lives are ever lived the same. And so they're going to go down different paths. And then secondly, if a client just came in and dumped a big file folder of all their statements and insurance policies and everything they had about their financial life and said, here, Missy, here's all my data, give me my financial plan. Well, I couldn't without a conversation with the client because I just wouldn't know enough about their goals, their life, how they wanted things to transition. And I think that's the danger that people fall into with a lot of one-time engagements or trying to DIY plans, that there's just not a lot of back and forth conversation and a lot of, probing and questioning and what if. And that's where I think a lot of value with the planning process happens is during our design meetings, where we have it up on the screen and we can really play around with the scenarios, and clients are like, oh, I didn't think about that, but I forgot to tell you this. And so we can make changes on the fly and really hone down to a recommended scenario. But even that's good for this point in time right now. And maybe 6 months, a year from now, when we meet with that client again, the landscape has totally changed and we need to update the plan because life changes. So
yeah, well, we do update the plan. That's
yes.
a mandatory thing. You're not going to be a Wiser Wealth Management client and not have an updated financial plan.
And that's what I was going to say about people who utilize Excel spreadsheets or use some of these online calculators. They tend to be linear.
Yeah.
Linear in planning, that every year is like every other year, like an Excel spreadsheet, applying a rate of return over a number of years. Well, life isn't linear. The market certainly isn't linear. Nothing about it is linear. And so that right off the bat, they're making assumptions and utilizing that data that is that's false inherently, because it's a linear, adjusted. So, our planning obviously is therefore nonlinear. Okay, our planning software really just allows us to, as Case says, custody the data, arrange the data so that we can run different scenarios, and then apply to that best practices, experience, and wisdom based upon what the client wants. The financial aspect of our lives and our retirements are really our resources. It's what do we want? Okay, what do we want, and when do we want them to occur? This event. So the resources are simply applied to the event and to the wants and the needs. They're simply what do we have in order to achieve the things that we want to do. So they follow the wants and the needs, whereas linear planning leads the wants and the needs, and by what you have is what you can thereby want and need and get afterwards. And we turn that around and say, what do you want? And let's figure out how to make the resources be there and be present at the time that they come into need. So
I think the world is changing for advisors. So, I'd love to have a panel here of some of my peers, which they'll probably do it. Maybe that's a good podcast. But the role of an asset manager for individuals, like managing money, that's a dead business model. That we have a new, they say he's a competitor. I don't know if he's really a competitor, but there's a new firm here on the square, relocated in from Vinings. And I thought, oh, who's this new group? Go online, look them up. Pays to be on Fox News, pays to advertise on local radio. I pulled out his ADV, right? So I looked at his ADV. He's charging anywhere from 1 to 1.5% asset management fee, in addition to a 20% performance fee.
Whoa.
So if he makes you money, he keeps 20% of it. And it's a small firm. It's like $130 million in assets. But I looked at his prior filing, he was at $95 million in assets. So he is growing through 2021, he appeared to have grown. But I looked at that and going, man, think of all the people that are going there. They're hiring to be an asset manager. There's nothing about financial planning on his website. So my guess is he's probably doing some type of planning. His clients thinks they have financial planning, but really what they have is more of a cash flow planning, I guess. If you're a retiree with that firm, oh, can we keep up with your withdrawals? Now, is inflation calculated into those withdrawals, right? You know, do we have other aspects of your life that have been checked off? Do we have estate planning? Have we done proper property and casualty? Do we have enough life insurance? Do we have all these other aspects of financial planning? They're just focusing, probably, my guess is, just on like cash flow planning in retirement. And then he's hanging his hat on assets under management, meaning this is what I've done for you with my portfolio.
Yeah.
And I will admit, a lot of clients, when they first get here, that's what they're finding us for, because they need help with that. But we're able to show them the big picture. So not only is he in the dying side of the portfolio, the reason why it's dying, now human nature will probably always keep shops like that in business because they feel like they're winners, they can beat stuff. But statistically, you're not going to beat the S&P 500. Over the last 10 years, you have a 94% chance of beating every asset manager if you just bought the S&P 500. And you also have to remember that when you advertise, these people, maybe not this firm specifically, but especially mutual fund land, when they advertise their performance, they're doing it in their best years.
Yeah.
They're showing you their best years. And now, recently, this was in the Wall Street Journal, recently it's been exposed that they actually changed their benchmark also.
Oh, really?
In order to show we've beat
whatever benchmark.
Many
So
mutual funds change their benchmark.
They find the benchmark that best
they
suits
can
them.
beat.
Correct. Yeah. So maybe asset managers like this guy, he's not comparing himself to the S&P 500. It's the entire world. Maybe it's which, you know, international, which is underperformed. So it'd be pretty easy to beat that, right? So there's a lot of different angles, but ultimately though, it's, you know, I think that the role of an asset manager doesn't make sense as for just everyday, your millionaires next door, when you can build Vanguard based State Street, BlackRock, whatever, passive index funds, and you're going to outperform most of everybody, right? For nothing, for zero cost, right? So it's tail wagging the dog. It's the tail wagging the dog. You have to focus first on the planning. The planning will drive the portfolio. The portfolio is going to take care of itself as long as you have good behavior in your long-term focus investing plan. And so part of that planning is make sure you have enough cash. No?
Exactly. And, you know, I think back to this client, this couple that Michaela and I just met with recently, an executive that earns a really healthy salary, but still had a ton of debt built up. And so as a result of this, you know, really great salary, they could afford to throw a ton into savings each month, you know, maybe $7,000 a month or $84,000 a year. And I would think, you know, like in the brokerage world, an asset grabbing firm would be like, oh, all right, let's throw this in. This is really going to help your retirement.
Right.
And sure, yeah, that would. But right now, their priority, they've got to extinguish this couple $100,000 of debt ASAP because they're paying big interest charges. So, you know, at Wiser, we look at that big picture and what it looks like. And we told them, no, here's the debt reduction plan. You know, you've made great money. Let's throw it at the debt. And so we got a plan in place. They were so relieved at, you know, someone telling them like how to tackle it. They knew it was the right thing to do. They were kind of stressed because they knew they had to save for retirement too, but they just needed us to tell them what to prioritize. Mm-hmm. Then when they're finished paying down this debt in a couple years, then they're going to be socking away a huge monthly amount towards retirement. So they appreciated the common sense approach to how to prioritize and how to eventually get on the path. They are going to have the discipline to save that much each month and eventually build it towards retirement goals.
Yep.
But only because they were here at a fee-only firm like Wiser, where we have that, you know, thought process and putting the client's needs first, that they walked away just like, with a deep breath and just so relieved to have the path,
a plan.
a plan.
Yeah.
Exactly, Casey.
Exactly.
Yeah, the plan.
And when you talk about holistic financial planning and it becomes part of the conversation, it changes over time, doesn't it? And so as we have talked recently about, holistic planning from your 20s and 30s and 40s, 50s and 60s and 70s, it's changed slightly based upon our station in life at that point in time. But the common thread that goes through all of it is something that the two of you have just talked about, and that's with good behavior.
Yeah.
Okay. Long-term healthy asset classes will perform and meet the goals and objectives as long as you have the good investor behavior. People who may make, are blessed with a very high income, they may have made some behavioral issues that need to be adjusted, and they're fortunate that they can do that. But had they not done that, they wouldn't be in this situation to begin with. And so planning really begins way back in our 20s when we start with that first paycheck that we earn. How am I going to create good behavior so that I don't make mistakes? Okay. A planning firm such as ours, one of the things that we do is help people not make mistakes, quite frankly, so that they don't get off on these tangents that we need to corral them back towards, the path that we talk about to financial success. So planning, yes, we talked a lot about the numbers, we talk about the goals and objectives, but it's the behavior quite often that we want to establish so that all these other things should just fall into place.
Also, too, I think it's so everything we talked about so far is numerical, right? There's also the legacy portion, which we kind of got into in our last series podcast over the summer. But it's what is our long-term goal? Is it there was a couple of families here recently. They're asking, we have excess. And what do we do with this excess? And my response to that was, you build, I think maybe you've been in that meeting with me. You just build legacy, right? That legacy is, okay, you have excess amount of income. That's great. Let's get the whole family for a week at the beach. You're not going to put that financial burden on anybody else. You can cover that cost and just build memories and doing the things that you want to do. And so it's giving people that freedom to go do that. You got to remember that everyone has an agenda. I've worked so hard to make this firm where the agenda is the client, but there's still human nature. So we still have to check ourselves occasionally, say, are we doing the right thing here? Which is why we do planning as a group, right? We all see the plans before they go out. But ultimately, most firms do not operate this way. Most firms have what they call silo approaches. So each advisor might have an assistant, but each advisor is kind of on their own. They're trying to achieve goals. They're pitted against their fellow employees. Who's produced the more for the boss this quarter, this year, right? This week, this month. So in those environments, the clients get forgotten very, very quickly. And so all of a sudden the financial planning becomes very biased in that they're trying to close out whatever their sale is. Even in a fee-based firm, it can happen that way because the system's not set up, the structure of the company's not set up to benefit the person, to benefit the clientele. So you have to kind of be able to see through that and say, okay, what is this advisor's agenda for himself or herself? And so we try to break those down, which I think allows us to be much more personally connected with our clients as they're passing through. But I don't necessarily mean this to be an advertisement for us. There's other firms that are doing a good job at this as well. They're just more boutique firms like ours. They don't have their names on the side of stadiums or advertisements on TV, on the national TV anyway. So you just have to be careful and understand what the agenda is. Now, there are also some firms you should avoid. I would tell anyone on this podcast, in person, I'll put it on paper, you should never go to an Edward Jones. I'll say it right now. Brad's cringing over here. Casey, what are you doing? No, I'm serious. That company's not set up in anybody's interest but Edward Jones' interest. And their advisors drink this huge glass of Kool-Aid, and it's just they're the bottom feeders of our industry. They're right there with Primerica. Primerica is another one. You should never be doing business with Primerica. You know why? It's multi-level marketing. I'm going to sell you a mutual fund, Missy, and then after I sell you the mutual fund, I'm then going to see if you'll be willing to join me and you sell mutual funds to other people.
I know.
I mean, what the heck?
Yeah, who's winning there?
I don't know. But yeah, these are places that you should never. And any person who's selling, I'll add another one. Any person who's selling you insurance,
Oh yeah,
should never be your investment advisor.
absolutely.
If they're selling insurance, if they're even licensed to sell insurance, I've got a couple of friends that still have license to sell insurance. They don't do much. They always say, "Oh, we really don't do much of it." Then get rid of it. Disavow it.
Mm-hmm. Always ask your advisor, what are you getting, or how are you getting compensated by me implementing these recommendations?
Absolutely.
See, and all the conflicts of interest go away if, to your point, Casey, if you don't take advice from the same people that custody your assets.
Right.
Like, all the conflicts of interest
Yes.
go away. Now, we don't custody assets. We
Correct.
custody assets away.
Right.
Okay.
Well,
but if you're
yeah.
taking advice from the people who custody your assets, there are ways for them to be compensated that are not being presented to you.
What do you mean by that? I mean,
Well,
because Bernie Madoff custodied his own assets, so I would say that's a Ponzi scheme.
That's right.
So did SBF and this
He-
whole FTX crap.
So they custody the assets. They had control of how they were used and monetized and collateralized.
Who did?
The custody firm. Okay. So they also produced the statements. Right?
Who's
Bernie
they?
Madoff.
Oh, yeah.
Bernie
Yeah.
Madoff typed up his own brokerage
Okay.
statements.
Okay. I don't know. Somehow we
So
went from
for-
insurance sales to Ponzi schemes. I got confused.
So, for example, anybody who's custodying assets has ways to earn money off those assets through
Yeah.
margin loans,
Right.
through stock loan, through collateralization.
I'd say-
that's all sorts of ways. Proprietary products, for example.
Yeah.
There's all sorts of ways that are not being presented to the asset owner, the investor, that money is being made off of their assets without their knowledge. Okay, so if you're taking advice from a broker who's got your assets at their brokerage firm, whether you make a single trade or not, they're making money off of you.
Oh, yeah. Okay. So I'm with you now.
Yeah.
You just lost me there for a second.
Well, that is
So-
the way.
so-
You do
so-
not take
so,
advice from the
yes.
people who custody your
Yeah.
assets.
You wouldn't go, okay, well, that gets more murky now because
Yeah.
if you think about it, Schwab, we're moving to Schwab,
Yeah.
which I after this last conference, I think it's going to be a great move. But Schwab also has their own advisors who sell their own funds.
Uh-huh.
That's
See?
not a good relationship.
That's right.
But the relationship with Wiser, who's helping you make decisions, right? And then, but we don't manage the asset. I mean, we don't hold the assets.
We don't
in
hold-
our firm.
we do not custody
the
the
assets are
assets.
held at Schwab,
Right.
as independent. That's a good relationship.
That's right.
Right. Exactly.
Yes.
So yeah. So if you're at Merrill, and Merrill doesn't have their own funds, or do they?
Sure, they do.
Who do they buy? They don't.
They
have
have acquired multiple asset management firms.
Because I
They
know-
may keep them under that boutique name,
Yes.
but they're owned by Merrill Lynch or now Bank of America. owns
Correct.
Merrill
Oh,
Lynch.
yes.
Yeah.
So Bank of America has funds. Okay.
When I was at a long time ago, 22 years ago, I started my career off. I worked for 1 year. It's miserable at AXA Equitable, and they bought Alliance Bernstein, I think, at the time. And so I know that if we used an Alliance Bernstein fund, we got like a 6% commission.
go.
If we used a Vanguard fund, they paid us zero for buying the index. Not even a wrap account. Back then, I think wrap accounts weren't as prevalent as they are now. But yeah, so the whole point in all this is that these people developing financial plans is almost laughable because the system is set up to almost invade your privacy to figure out what else you have to then be able to sell you more. That's really what it comes down to.
Don't buy in.
Right. Don't buy in. But these people are really good salespeople, though.
They are.
It's not like these are evil villains lurking in the dark. These are guys and gals that are in my Sunday school class. These are guys that are good, likable people. They just their toolbox is built all wrong.
They're
It's
in
a
a
broken
bad
system.
Yeah.
There you go.
But they don't know that. But they don't know that.
They don't. And I think about, at Wiser, how we help our clients facilitate finding an estate planning attorney or finding a life insurance agent or a property and casualty agent. And even then, there's no skin off our back if they want to use an existing relationship that
we
they
receive
have.
no remuneration from that recommendation.
No,
These are people that we have just known and know that they're going to service their clients in a manner that we serve them and the clients have been accustomed to being served.
I don't even think we got like Christmas goodies or anything from these
Yeah.
people last year.
I mean, where's
I'm
some
trying to
cookies?
I think about our insurance guy right now. We probably sent him a couple $100,000 worth of business.
He's probably
this
$1
year,
million
right?
round table.
Yeah.
Yeah.
I know, right? He probably is.
But that's the whole point of it. Like, we don't want to be tied in or beholden to anybody because we just want to do what's best for our clients and
Yeah.
have them find the lowest cost, quality professional in each discipline.
And we don't even ask them for referrals. We're really bad at that. Maybe we're supposed to, is good practice. I don't know. I actually wrote an email to everyone last night, all of our outside partners, and I was asking for votes for Best of Cobb. You can.
Oh, okay.
It's probably linked in the show notes, so you can still do that, I think. But I told them, I said, I don't ask referrals from you because you have to be the best for me to send people to you, and I have to be the best to get referrals back. So I understand. I'm never going to say, hey, you send me somebody, I'll send you somebody.
Right.
I don't think that really helps the client at all in
No.
the end. But that is a practice. That is a practice. People, I'll send these people and you send me this. Even I don't think I even told you guys this, but Doug Butler, he's been on the podcast a few times. We've been sending him a lot of more of our basic legal work, and he's like, hey, tell me what I can do for you guys, because we haven't really sent referrals back because we're in a position where we don't really get them early enough. I'm like, nothing, Doug, you keep being the best, return phone calls, emails,
Serve our
and,
clients
and draft good documents, and I'll keep sending it. The day you stop doing that is the day I find somebody else who's going to do the job right. So point in all this again is you have to find someone who's unbiased, who understands what your life aspirations are. And if people come in and they don't have life aspirations, we can help them find some.
Yeah.
We're pretty good at that.
But I think most people who come in are here for a reason.
Yes. Correct.
And they're going to have some sort of life aspirations. And that's the first question we ask them,
Right.
What is it you want us to do for you or help you solve, or what are you struggling with?
I think that, my personal mission has always been help anyone who comes to the door. So sometimes Brad and I would get on a call and the person's already checked the box. They have less than $250,000. They need help getting out of debt or something like that. And I think it's those people that we end up helping with those type of goals. Because a lot of times with them, I'm like, is this how you want your life to be?
Yeah.
You want to pay Amex 22%, and you might want to own a home someday. There's no handouts. You have to go get it. And so you're going to start by doing this, and this is how you get out of debt. Call me back. And it's always good to have those phone calls later, and they go, I'm debt free. What do I do now? And that's amazing.
Well, Casey, that's one of the things that really drew me to Wiser is the fact that we will still talk to those people and not just turn them away because they don't have assets or we don't know what their assets are. We will still listen to them and we will help give them whatever level of advice that we can to give them that little nugget of wisdom to help them turn their life around and get on the right financial path.
Yeah.
Because everybody needs help. So
Correct.
Let's do what we can.
That's a great segue into our next quarter's theme. This is your last chance to do our download now. We've had fun this quarter going through financial planning through your 20s, through your 60s. We've got a lot of positive feedback from our listeners on this episode, so that's been great. But you can download that now, but pretty soon we're going to be switching over to our next podcast theme, which is financial success is intentional. And something that's just kind of a theme that I see out there is people continue to say, oh, I have a plan. I have a financial plan in place. And we get the plan, and the plan's horrible. And so I want to go through a quarter, and we're going to bring in some guests. I'm excited about it. Where financial success is intentional. Just success in all is intentional, right? I mean, no one just wakes up one morning and they're financially fit automatically, right?
Right. You
Some
have
people-
to buy the lottery ticket.
Even that, right? But somebody was financially fit. If you wake up one morning, all of a sudden you're financially successful. Maybe you inherited it, but you can also dwindle it just as fast, right? Athletes don't rise to the top of their game because they were sitting on the couch watching other athletes. They do it because they decided this is what they wanted, and then every morning when they wake up, they had a purpose of growing. Business owners don't become successful business owners by chance. There's probably some luck in the sales process or something along that way, but it's a routine. Every morning there's a routine. This is what I'm going to do, and if it doesn't work, I'm going to pivot. I'm going to do this. And so we're going to put a lot of focus on the next quarter on financial success is intentional. The new white paper coming out will be basically focused on how to avoid financial planning failure, right? What are things you can do in your financial plan that will derail you? So we'll focus on that and planning overall. Missy, I'm sure you'll be back on many more episodes going forward. And anybody else have anything they want to add?
No?
All right, guys. Great conversation. Talk to you next time.
Good.
All right. Bye-bye.
Sounds great.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening, that way you don't miss any new episodes. We would also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. We would love to hear from you. This episode was produced and edited by Lilton Moore.